The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. It is my pleasure to be here Monday through Friday, 11 o'clock till noon, Eastern Time, of course. Right now, this is the time. So, thank you, Steve, and to Daryl Martin, Steve Rhodes, Daryl Martin, great duo that they had a terrific hour this last hour. Steve introduced the show, the TFNN shows this morning at 9 o'clock. Straight after my show comes Nico DeHaan. Nico's on at noon to 1. Daryl Martin comes back, a diagnostic trading hour. Then you've got Dave White. Dave has a very unusual, at least for me, it's the way his thought process is. We call him the high-tech guru here at TFNN. And so his thought process is quite unique. And just as Daryl developed this trading box in his diagnostic program, which is also quite unique, using different differentials to gauge whether it's overbought, prices are overbought or oversold. So Dave looks at volume, and he looks at extensions, and the process that he uses is a longer term, so that he's looking out towards what could be a resistance or a support level, and then he bases his trades on volume. So it's quite unique. We have, here at TFNN, Tom has 2 books out on trading. We have a ton of information. Ken Shreve has used the Investors Business Daily knowledge that he had to have some fabulous trades. We've got a great show, the Option Hour, on Tuesday at 12. I think it's straight after my show, 12 o'clock. And so we are just full of resources right here. Now, talking about resources, we've also got something going on here. It's the Salvation Army. This is really, we did it last year at TFNN. It was very successful. It's the Salvation Army Tiger Dollar Sale. It's just a win-win for everyone. I mean, if you were going to, let's just say you're interested in my webinar that comes up next week, Thursday, 2 days. And I've especially made it a reduced price. We've got, you can use your Tiger dollars. You can use these dollars to not just benefit yourself, but you will get a tax benefit, because there's an access, there's between 10 and 25%, 20% of the bonus when you purchase is going to go, towards helping you to get a better deal. 25%, actually, it's a 25% increase in whatever you pay. Not only that, the Tiger dollars, if you spend, say, $500, you receive $625. $25 will be donated to the Salvation Army in your name. That is really nice. So look at the front page of TFNN. Check it out. Also check out my webinar coming up. I'm really excited about this. It's going to be just a very detailed look on how you can go through the buy signals to buy modes. Right now I've got a chart up. It's a 120-minute chart of the NQZ. If you trade futures, you could trade anything. It doesn't really matter, because the process is exactly the same. So if you look at the futures, the NDX December contract, the NQ, that is NQZ, went to a low of 24.92 on the 16th of November at noon. Then it makes, now the whole concept here is to identify just look at the most visible lowest low bar. That's where you start your count to the upside. And then each successively higher peak gets labeled capital A, capital B, capital C, capital D. Capital D is what you want to go to. That's the target. It's a forward-looking indicator. Things can happen at peak D to go to an E and then pull back, but it could even recycle. Well, what happens is it goes to the D, and it goes to the D at 25.9650 on the 20th of November at noon. And you see that blue line there? If you're looking at the Tiger Technicians Hour, no, if you're looking at Tiger TV during the Tiger Technicians Hour, you will see that there's a blue line. Look at that blue line. It's resistance. It goes towards resistance, it pulls back. Makes another identifiable low bar. It goes peak A, B, C, spirals over that line. It hugs the line, and then says, great, I feel comfortable. I'm out of here. and it spikes up and it goes to peak D. But look at the technicals. This is what I teach you. Look how the MACD is holding so well. The stochastic is still, it's pulled back, but it's holding very nicely. But it goes D, holds the 9-period moving average. That's that beigey color line right there that you can just see. I am looking at, yep, I can see it right there on my mobile device. And then it goes to an E and an F. When you get to an F and the technicals are fading, look at that vertical line that I've just drawn there. I'll put it in so you can see. See that vertical line? There's a little doji, another. I'm going to teach you about dojis. I'm going to teach you about this thing that I've been talking about for over a year. It's the silent signals, the silent doji, the silent round number. Sometimes they're very visible. Sometimes they are quiet. Sometimes they happen a bar before, a bar after. I teach you what happens there. Now look what happens. It goes to the peak F, failing technicals, whoosh, the technicals slide, and so does the price. The price goes down from 4 o'clock, that's 2 o'clock on 27th of November from 2658.75. Hits what? The 200-period moving average. It bounces up, it goes peak A, B, C, and I'm waiting all day yesterday. I said, we've got to a C, let's see if we're going to get to a D. Pop this morning goes to 2689.75, 11th, that's the 30th of November, last day of the month, and it's at 8 o'clock this morning. The technicals were fading, and the price pulled back, but only a little bit. Now it's back to hugging that 9-period exponential moving average. This is saying there is internal buying, internal strength for now. And until that 9-period moving average, this beige greeny line, that was in fact resistance and then became support. Until it becomes resistance definitively, you've got to expect it's trying very hard to stick to the 2675, 2677 area. Okay, so I just wanted to go through that. But wait a minute. How does this apply? This is the short term. Well, how does it apply to the longer term? This is leg A up. The leg A in the daily chart has gone from 24.92 at 3:15 in the afternoon. Was that night? 5:15 in the evening. And what does it do? That's on the 16th. It soars to a new recovery high today at 26.89. 26.89. That's almost 200 NASDAQ points. And that is something to behold. Still single leg A. That is a very powerful move. It makes a worst case basis 2640 to 2620 as key support if there is a sudden downturn. And what I say to subscribers on my opening call, that's my daily service that comes out every day, starting at about 6:15, 6:30 in the morning. I'm sending out charts, sending out my Dow chart with analysis, detailed analysis, this one right here. I give all the analysis. I'm showing what we've been looking at all the time is the parallel move between the takeoff a V-shaped pattern from the 4th of June in the Dow at 12,035. It went to peak B and then consolidated, but held that red moving average line right there. That's the 9-period moving average. Well, we went to A and then pulled back and held the 9-period moving average. Now it's making a leg B, which will be a peak B of 13,062.56. Is not taken out today. So far, it's 9 points away from that. But the high is at 9 points away from that. And then I give a whole write-up on this. Now, what you get for my webinar that's coming up is you get my CD introducing the ChapmanWave methodology right there. I mean, it has everything. It even has, let's see, slide 390. Let's go to slide 390. Type in here. Slide 390, where will I do that? Slide 390, yeah, I'll just scroll down. 390, there it is, coming up, there it is. There. It even has cartoons that I drew many years ago. This one is on the dollar. This is back in the 1980s. How deep, the wife says to the husband who's down in the water with a snorkel and goggles, and says, how deep did you go? I couldn't even see you. He says, I sang so low, the only thing down there was the dollar. Okay, you see how historically things never change? Look at this one here. This is what I drew the day after the crash, and I sent to the Boston Globe. This is slide 18. Wait, I'm just trying to find. There it is, 18. I drew this one. Of course, they didn't take it because there was a little humor attached, and they were all very depressed. But that was, in fact, the low. Oh my gosh! What do you say to a 500-point drop? And she says, oops. So, a little humor involved, as well as a glossary here of all the terms. Glossary goes all the way back to the end there. Look at that. Glossary terms. This is such a comprehensive look at notation, ChapmanWave headings or titles, standard arch formation, alternate wave count, that's the ChapmanWave, bottoms, break up, break down. This is not the romance, bowl formation. Goes on and on. So that's for free. That's $249 thrown right in, and we overnight it to you. I take up the cost for that. I want you to learn about the moving averages, so I give a moving average webinar for free, but just like that. Not only that, you get my opening call. Opening call, $100 and something dollars a month, free. So, and you can use your Tiger dollars. Please consider it. And if you are considering it, don't wait. Give yourself a gift. Do it now. Why? Because I want to be able to get you that CD by Monday or Tuesday. I'd like you to have it. You don't have to have it, although you have to have it by the time you start studying it, because these are going to be archived. You can go over them for 30 days, the full 2 days. You can go over any section you want as many times as you want. And if you get the CD book, because we will be going through the CD book, but I'll be discussing it. Every single move will be discussed in detail. You know, when I talk about the arch formation, I am going to give you something that says, and it'll go straight from the book, chapter 13, right there, chapter 13, right there. Arch formation, and there it is. It is just a look at the inside wave. These techniques, look at this, arch formation, and look at. Let me show you something right here. Talk about arch formation, UTX. Look at this beautiful cup formation, which of course is the opposite of the arch formation. But just look at this. Oops, it's the 120-minute chart. If I can find it, come on, 120-minute chart. I'll find it right now. Look at this. I'm going to get it. Then we're going to go to our calls. I just wanted to go through this. I want you to be able to be able to add to your own techniques. It's just so important. Ah, there it is. It was right there all the time. There's the arch formation. The cup formation. It's the same principle. Look at that inside wedge. Look how it took you right to the price point. I should extend it up. Right to the price point. Right there. Look at that. Isn't that nice? This is UTX, United Technologies. Left side, right side, price, time match. Short term made it beautifully. Now the longer term is going for it. It's got until today. 120-minute chart. It's a bar or two late. 1 bar late. So it needs to get to 80.39 to get an exact match. Is that good or is that good? Look at the MACD. Look at the stochastic. All right, enough with that. We're going to go to Ari in Arcadia straight after this, and Mike in New York. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, Basil Chapman, Tiger Technicians Hour, and the Dow. Let me just run the numbers quickly, and then we're going to go to our callers. We've got the Dow's down 18 at 13,003. I said to subscribers this morning that, remember yesterday I was talking to you, I said to you, that for subscribers, I said that green line, the diamonds, the DIA, had 130.59, very strong resistance. Well, it went to 130.54. I missed it by 5 cents. And today it tried again, and it went to 130.46. And that says to me, hey, consolidation, high-level consolidation. Leg B is going to be a peak B in the Dow today. I don't see that much to the downside. And if there is at this particular point, 12,930 is the 9-period exponential moving average and the breakout from the dashed down channel resistance. So that's kind of what I'm seeing. I'm expecting that we get a peak today. Why? Because you've had these spectacular moves. We just spoke about whatever it was that had that single leg A up, NQs. There has to be a pullback. Now, looking at that, let's just go on. We've got the S&P down 1.31 at 1414. The comp index is now down 10 at 2669. You've got gold down 11. You know, I don't like gold. I think it's going to be pulling back. I don't know yet the degree, because it's the pattern that I'm looking at that says there are certain levels of support, but if it accelerates slower into the close today, that'll be the tip-off that it's going to go even lower. Let's see. the question of the day. Let me answer this. Saratoga Bob asked, Basil, what would turn that into an A minus? And we were looking at the NQs. The NQZ. Of course, it'll be going out very soon because December's coming up. If it closes at any point underneath 25.77, I'm going to call it an A minus. Or if it uses up too much time and then starts a brand new buy mode. At this particular point with the stochastic at 88% and the MACD still strong, I doubt whether it's going to turn into an A minus, but I'll follow whatever it is. 26.21 is major support on the Q. So let me just continue here. So gold is down 11 to 17.18. Silver's down 5 cents. Silver's been much stronger. We'll talk about that in a moment. Platinum's down 7 now. High-grade copper. Telling you the opposite of the market every other day. Now it's at 363. Let me just go. I think it's HGG. I'm just going to go. Oops, HGG 13. HGG 13. Oh, very nice. Nice action. High-grade copper. I don't know. Is it HGF? Whatever it is, it's A, B. This is CD. This is leg D in the January contract for copper. I like what I'm seeing. And that kind of goes with it. I'm looking in the low trend. Bonds are really not doing very much. They're up a little bit here. They just in a trading pattern. I must say, if it wasn't for the words, this is what I said this morning to my subscriber. I'll give it to you. Let's just finish this because we've got callers waiting. And we've got bonds up 8 cents, 6 cents. So, so far, just a natural pullback that you need to get a peak after all these successful rallies to the upside. Let's go to our first caller. We've got Ari in Arcadia. Hi, Ari. How are you?
I'm doing very well, Basil.
Very good. Thank you. So, you are looking at the SLV, correct?
Yep.
Okay, and what do you get the letter in the ChapmanWave that we are possibly making right now?
In which time frame?
In the daily time frame.
I'm aggressive, so it's a B. I recycled. After the D, I recycled.
Oh, that right. So let me just explain what you did. And there's nothing wrong right at this particular time to still keep that in mind. What Ari did is there's a technique in my ChapmanWave methodology that I call the instant restart. And that is right here. It's the whole thing about how it works. What happens is that in the ChapmanWave, when you get to a leg D, and then it makes a peak D, but within 2 bars, especially something like this where it spirals up, and what we do is we have a parallel wave count. I've typed that in here for those of you watching on Tiger TV. And you'll see it's called D goes to parallel E/A. And there's nothing to do. You just say, hey, that's a wonderful indicator because it says prices can go higher. They just went higher. Now look at this. When it goes to the next high, it's called F/B. Why did I put F/C? It should be F/B. F/B. There it is, F/B. But if this leg pulls back too deeply, then there's no way it becomes a B. It becomes a peak F. So what you do is you looked at it because you wanted this to be a B, a recycled B, because the MACD is still very strong, correct?
Mostly because I'm aggressive on the weekly.
Okay. And the weekly is still very strong. We're going to get to that right when we get back because this is a very important moment. It's a very educational moment in the ChapmanWave. We'll be right back. Dow's down 12. S&P's just down a little bit. We'll be back right after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Ari in Arcadia, Florida, and we are looking at the SLV. Dow's down 23, S&P's down 357. Consolidation phase going on. Ari, excuse me. I've typed this into the chart itself. It says, Ari, are you able to see this chart?
In a few seconds I will if there's a little time delay.
There it is.
Yeah, I see it.
Okay, good. Now I've made you famous, Ari. You're on TV. Now look at this. In the 120-minute chart, there was a little mini peak A to peak E from the low of 30 at 1330 on the 24th of October to the high of the 1st of November at 3152. It pulls back really sharply and it goes to a low of 29.84 at 1:30 in the afternoon on the 2nd. Then it starts at peak A, B, C, and it spikes right through the 200-period moving resistance, this blue line, and it goes where? To a left side, right side price time match, and it doesn't quite make it, but it makes a doji candle right at 33.10 on the 26th at 11:30 in the morning. That peak E pulls back, goes back under the 200-period moving average, the same bar, the same 120-minute bar spikes above it, and it has this right arm extension. Perfect. In my CD introducing the introducing the ChapmanWave methodology, there's a particular technique. I can't do this right now because I've got I'm holding my mouse in the right hand, but it's this particular chapter here, the right arm extension. And what I do always when I talk about it, I always raise my hand like you do when you do an IM. You have the person in the right hand is up in the air like you used to do when you were back in the old days when you were in school and you wanted to leave the classroom to go to the bathroom. You'd raise your right hand. Well, I don't know what they do today. What happened was there was a spiral up to this peak E, nominally higher at 33.31, and I call that peak F. Earlier on, I'd done this peak F. I've drawn a right and what I call the inside wedge pattern, and that was going towards the high that would have made a top at 3:30 in the afternoon on the 27th, but instead it did it today, a couple of days late, but only barely made it. Now what it's doing is going to retest the 32.19 area, which is the 200-period moving average support. The MACD, and this is what I describe in my right arm extension, if either the pattern is either they go to a high, it's a negative pattern, or the MACD and the stochastic are failing. That's exactly what happened here. So my thinking here is that silver is going to test the low of 31.91, the SLV I should say, the iShares Silver Trust, is going to test 31.91. And if that happens, that's going to confirm for me that we've made a peak F top in the daily, but the stochastic still at 85% and the MACD is still good. Now we get to the weekly chart. The weekly chart, you've got a peak C, I bet, and you're waiting to see if you can go above that for leg D up above 34.09. Is that correct?
Yes, and more important, it'll be a B for the monthly.
And then the monthly chart gets even stronger, although it's what I call a gray letter B, meaning gray always signals, or a different color from the main theme, signals that it is way under all the previous peaks. The peak of February of this year, 36.44, obviously the peak of 42.78, August of last year, and the major peak D at 48.35 from April of 2011. So far, this is actually quite good action and today's going to be the close of the month. So on a monthly basis, silver monthly is still looking quite good. Silver weekly, unless it closes under 31.79 today, is still, that would be the 9-period moving average, is looking quite good. But you see that the MACD is that dolphin pattern, and there's a good chance that this right arch is going to fail. Now, the reason why I say it, and this will answer the question from yesterday I had from Chris in an email, what about the weekly and the monthly of the GLD? Because they kind of do go together, even though silver's stronger. Well, the pattern I'm looking at in the weekly is the same kind of pattern that I think is going to unfold for silver. I think there's going to be a right shoulder failure. What is a right shoulder failure? Well, right shoulder failure is, here I'll go to the right shoulder failure. The right shoulder failure is right there. It's chapter 21, and it discusses it. And basically what it says that there's a pattern that rallies, where it rallies from a previous high, but it doesn't make it, and it turns out to make what the pattern that I call the dreaded H. That's usually what happens with a right shoulder failure. So, Ari, I technically, the MACD is a little bit, it's flattening, but a little bit weak on the weekly GLD, but the stochastic is very weak. When you look at the SLV, there's a difference, because the fast-moving average is still positive in the SLV weekly. The MACD, so the MACD is, but the stochastic is only at 65%. I'm looking to see, and the extension out to the right in this cup formation is getting a little bit long. So I'm going to make it real clear, Ari, if by Tuesday afternoon, Wednesday morning, SLV is not in the 34.35 to 34.58 area, but instead is at 31.50 or lower, I think that's going to turn out to be a failure pattern. So I hope that helps you. And as I'm looking at this right now, my thinking here on the SLV daily chart is saying, be careful, because it's starting to get into the body of the candle of 2 days ago. So what I'm saying is, yes, I know that you're aggressive, and you know that I'm always a little more conservative. I think the conservative outlook right now is going to say that the stochastic and the MACD and the daily charts are going to be imperative. If if SLV goes under 3150, then the gap from 3174 will be introduced. You're coming back to it. That's the gap up on the 19th. And then the high of 3157, that's the gap area. It's going to be very critical. So I hope that helps you. So basically what I'm saying is I would be thinking of taking a little bit of profits right here. I know that you want to be more aggressive. I'd be a little more conservative because you can always add it back. Because if SLV comes back to 32.90 to 33, I say, hey, Ari, you can put it back. You might have lost a little bit, but now you got a chance to start that recycle up in the instant restart to go above 33.31. Hope that helps you.
I appreciate it.
Thank you so much for calling. Ariane, okay, let's go to Mike in New York, patiently waiting. All right, thanks for your patience, Mike. How are you doing?
Great. I'm having trouble getting the weekly count in Under Armour.
That's because of the development over the last 18 months that I've been using. I'd actually used it way, way before, but I formalized it. You know the pattern that I call C1, C2?
Yes. Yeah.
Okay, and what it is, folks, it's real simple. You know, the premise of the ChapmanWave is in every buy mode, you basically want to get to a D. You can go higher, but D's where you've got to be careful. Over the years, I discovered that there are times where you can go to peak C. Let's say peak C is at 25. And then what happens is you pull back, and then you come back, and instead of going to 25, it goes to 24. It has to be very close, 24.92 or 24.87 or 24.98. And then it pulls back, and the pullback takes out the trough, the previous trough. In this case, it happened twice, and that's the reason why I thought that this is a very appropriate. In fact, I'm using this as a very good example of this particular technique in a webinar I hope to do sometime early next year. And basically what happens, the stochastic and MACD act as if there was a nominal peak D after peak C, but they are saying regardless of whether you make that extra leg up to confirm the D, you are going to a sell signal. And if you don't identify C1 going to C2, C2 is always a tad lower, you can make the mistake of waiting patiently for D, and D might never come, or it could come, but after quite a bit of a dip. And in this case, what happened, let's go to this. The low bar, we're looking at UA, folks. That's Under Armour. It's trading right now at 52.06. It went to a peak C the other day in the daily and then pulled back. But look at this, the weekly chart. There's a lovely technique that I call the ChapmanWave flat base technique. I'm not going to discuss that now. Let's just go from the low of the week of the 19th of August at 26.31. It went to peak A at 36.68. Peak B at 40.40 on the 16th, week of the 16th of September. Then it goes to a doji candle, 43.70 high, 43.70 high on the week of the 4th of November of 2011, pulls back for a few days, has a rally that goes to 42.43. So it misses by 33 cents going to that previous high. But right there, if you look at my vertical line, I'll do this because I've noticed that when that little square pops up, it irritates me, so I suspect it irritates everybody else. You'll see that particular vertical line had the MACD weaker, and the stochastic was way down, under 80%. That was a heads up to say, hey, be careful, because if it breaks below the trough, in this case the trough of 36.78, that's going to be a peak. You can put a down arrow, even though down arrows never come from a lower high bar. This is the only time that it does. That's another rule. And then it goes like it was a peak D. It starts a brand new buy mode at 34.85 the week of the 23rd of December 2011. It goes A, B, C, D, goes to an E at 51.43 on the 20th of April 2012, pulls back, goes to a peak A at 53.93, and then it goes B, C1, and C2. And that C2, the high was 60.96 the week of the 14th of September. This one went to 60.20 the week of the 19th with the same cup formation, the exact same failure pattern. I've got a down arrow. I think Under Armour has made a peak E monthly top. I think there's a really good chance that it's making I haven't got the confirmation yet, but I'm really close to getting confirmation that Under Armour is making a monthly hat-trick top. That's monthly, weekly, daily hat-trick top. And that says that the count right now is that we've got a peak, basically a peak D with a C2 top on the week of the 19th of April at 60.20. It should really, the high is actually 60.96. That's really where the arrow should be, but I always have to put it on the right side. And I think it's going down. If Under Armour takes that 48.90, I think it's in real trouble. Didn't we talk about this the other day? And they were getting
early coming. I mean, I maybe, but
I spoke about it with someone the other day. I can't remember if earnings were coming out or what, and we were waiting. And basically, it's gone to this peak C. Now, will the peak C fail? Because the MACD and the stochastic are still very strong. I don't know. But all I'm saying is that my suspicion is that even if it turns around and rallies, the 56 area is going to be huge resistance, and there's just a really good chance that Under Armour will not see the 60 point, what did I say? Oh, and it's got a Fibonacci extension, 60.96. I don't think it's going back to 60.96 for a long, long time. I would say if ever, but I'm not going to say that. But if it's a hat-trick top, we're talking about a target on the downside of 44.07 sometime in the coming weeks, maybe a couple of months.
Oh, okay.
So I hope that helps you.
Yeah. All right. Great. Yep.
Thank you very much for calling. I appreciate that. Okay, folks, we've got just a moment here. Let me go through a couple of things. I promised myself I would do this. Let me just go. I don't even know what to go. I want to do the XL. Let's do the XLF. The XLF is the financials, the S&P Select Financial ETF Spider Fund. And basically what it's done, it's gone from the 200-period exponential moving average, right there, that blue line. There's that cup formation. Remember what I do? I call that in the ChapmanWave methodology. I call it the drop bucket. What's the drop bucket? It's just a double top formation. Chapter 22, right there it is. That's the drop bucket formation. It gives you great examples and tells you what to expect. There it is. That's the exact pattern. Aren't we looking at that exact pattern? Yep, there it is with a doji candle. And an inside buy mode. Oh, inside buy mode. I have to write that down because I got a whole book with these things. Inside buy mode. XLF, and that was in October 2012. All right, good. So what's happened here is a very nice rally. Stochastic's improving, MACD's good, and it's gone to a peak B from the low bar of 15.06. So now you get to a peak B, and it's struggling to make C above 15.85. So I grab my 120-minute chart, and I think it's done on my black charts, but that's fine. We'll go fresh to this particular one. Let's just look to the left of the 200-period exponential moving average. Oh, look, this is fully notated. So this goes, let me just finish this up, and then I'll talk about it. F, it goes down. If you're watching Tiger, this is what we do. I mean, this is it's your ABC. It's your alphabet soup. So, yeah, we go, oh, people say soup. So that's A. How many times do we get a peak D? I mean, it is just phenomenal. Find me another technique that in chart after chart has a success rate of identifying the waveform like this. I'll challenge you. Find it for me. I just don't think it's done. Okay, so this is A, B, C. Is that higher? My eye says it's higher. 16.20, 16.20, double top. C1, C2. Unbelievable. There it is. That's the technique. The technique says, watch out for the right shoulder, thallium, and it says, be careful of the stochastic that breaks down. Now we come back down and we'll do it. I'll finish this up and we'll talk about it as soon as I get back. Basil Chapman, 877-927-6348. Dow's only down 21. S&P's down 2.9.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, just real quick, we're going to go right back to the XLF, but I had a question of the den about SYMC, Symantec Core, about the monthly chart. Monthly chart shows that there's tremendous resistance in the 19.75 to 20 point, maybe 20.60 area, and it could very well try to get there, and that's really where the test of internal strength or weakness will be. Now let's get back to the XLF. So lo and behold, we get yet another peak D, and this peak D is right on the 200-period moving average, and the XLF is holding really well, even though the technicals are starting to weaken a tad. In fact, folks, if you learn how to read the fast-moving average of the MACD, look at it. It takes the shape most of the time of the price that you're following. But in this particular case, the price is stronger right there at 11:30 in the 120-minute chart on the 29th. Oh, that's today. It's how can it be 11:30 today? It is. Oh, this is the whole. No, this is a 120-minute chart. Oh, today's the 30th, 129, yeah, 11:29. Okay, so so it says that internally there's still strength in the XLF. I wanted to get to that. There's another peak D. Now I need to just cover a couple of things. if you can get to CFNN today so that they know that you want to do the webinar and you sign up for it, besides the fantastic bargains, I mean, you're barely paying for a 2-day course. I mean, I love teaching. I want to do this. I want to get the word out as much as I can. So call them up, get the signed up, because then we can send you as soon as possible the CD introducing the ChapmanWave. I just showed you the techniques of the chapters. That's number one. Number two is in looking at your charts, you can add, if you've got a technique with veracity, if you've got a technique that it's cogent, it's clear, and when there's finally a variation of it, it's only because you understand the core so well, you can say that's the variation. Peak C1 to C2 is the variation. But it's very seldom you break through. You can't form fit a technique, otherwise you'll be form fitting it for every single up move, down move. No, this is the ChapmanWave, is the waveform that never sleeps. Every single peak and trough gets counted. That's your only obligation. And then to put in the letters. So that's what I wanted to talk about. And today, if you can get it today, we'll be able to get you the CD as soon as possible. I want you to get it. All right, if it comes a little late, that's not a problem, because I will be covering it during the webinar. We have so much time, 16, 17 hours. I got time. But I'd like you to actually get a chance to read it like a book. Even just the start of it, it shows you the techniques, how the MACD works, how the stochastic works. It'll save us a little bit of time. I love teaching this. I want to teach it. I want people to come out. I get calls. There's our friend in the den, Bob, who's been using it all the time. Says, thanks, Basil. Love your methodical process. I cook using Cook's Illustrated. The recipes are methodical. The results are fantastic. And he's been using the 9-period moving average that I teach a lot about, the 9 EMA, to great advantage. Get this. It's just, I implore you to think about it. Not necessarily to take the course, but I implore you to at least think about it, because you can add it to your Fibonacci, to your butterflies, Gartley's, tiger butterflies, whatever it is. It doesn't matter what technique. So I wanted to get that. Now, quickly, as we're about to wrap up, I'm expecting some kind of a pullback, just a brief pullback. It could go into Monday afternoon, Tuesday morning maybe. And then I think we try for new highs very quickly, sometime next week. And those new highs should take us into that ugly candle in the Dow with a high of 13,228. That's the candle I want to see. So any break above 13,062.56 at any time in the next 2 days, depending on how strong it is, if it's just barely higher and then it pulls back and the Dow goes under 12,930, I'll have to say, okay, I'm now getting great signals to say that we're reaching the upper limit. We're getting to the end of this particular move. But if it's very strong, we will go higher. So I do not have a sell signal at all in my daily charts. I'm waiting for leg D. We'll see if it's going to come. Thanks for being here. Stay tuned for Nico Dahan and all the other great programming here at TFNN. Have a wonderful weekend. See you back Monday. Go to the front page of TFNN. Check your bargains. Check out my webinar coming up.